Welcome to the third lesson we offer here at OpenEye Forex, and this section covers indicators. Indicators, there are a lot of indicators that are offered within us in the markets and the MT4 platform. But these indicators that we look at here are the ones that we generally use at OpenEye Forex, but you may use any other indicator that you are comfortable with. The reason why we use these indicators are these are the indicators that have made more sense to us, or to me rather. But there are various other indicators that you can find on MetaTrader 4, or you can also download other indicators on a site which they call MQL4. But for the purposes of the training, we have limited the indicators that we use here to these ones in this section, but there are others. And you don't always need to use indicators. Sometimes when I trade, I use indicators, and sometimes when I trade, I don't use indicators. Especially over time, I've started using less and less indicators because I start to see the market. I've started to see the market a little bit more clearly. But then indicators will then try indicate to you, as they call the indicators, they'll try indicate to you as to where markets will go. So it's very important to know that indicators most of the time are a little bit behind. They use historical data with highs or lows of candles or the close prices of candles. But yeah, that's what indicators do. So let's just get into this lesson. Right. Technical indicators. We are technical analysts, but we like to use indicators for proper timed and confirmed entries. That still makes us technical traders though. We trade based off of structure that was taught to us before, like support and resistance, just with indicators. Naked chart trading is still good and well, but we want confirmed moves, and that's why we use the indicators below. So like I said, that there are, over time when you get better, you won't need to use indicators as much as before, although sometimes you will check on them every now and again. But then indicators are really useful, especially when you're an amateur trader, to just try identify the trend for you or show you where the market is going. So, disclaimer. It's really not that serious, but I feel one should put it out there. These are technical indicators, and in no way are they saying where the trade is going. They are simply mathematical calculated functions that will try to give us a direction of the market. Now here's why I say disclaimer. Nobody and no indicator can tell you exactly where the market is going. We may build up certain averages, which is the purpose of the indicators, to conclude where the market might go. But at the end of the day, the market decides. Although generally with the right use of the tools, you can win a majority of your trades. So no guru, nobody, whether they have 50 years experience in the market or 1 day experience in the market, nobody can tell you exactly where the market is going to go. And like we discussed in the beginning, is that there are trading is based on probabilities. So then that's how you're going to trade. So these indicators just show you where the probabilities are. All right, so the three indicators that we use is number one, the relative strength index. Number two, the Fibonacci candlesticks. So remember we spoke about candlesticks. If you did see lesson 2, we did speak about candlesticks, and now these are Fibonacci candlesticks, and you'll see the difference when we get there. And then the Ichimoku can go higher. So like I said, that there are thousands and thousands of indicators there. People are developing new indicators every day. But then these three are the ones that are found on MetaTrader and the ones that we've seen be more useful to people or bringing a better success rate. In fact, you can check the Ichimoku Kinko Hayo on babypips.com, and if ever I mention babypips.com a lot, I'm not associated with them, I'm not affiliated with them, but then that is a good platform for learning, free platform for learning, and you can pick up on some other stuff that maybe that I haven't taught you, or maybe your personality doesn't exactly fit the way we trade here, although any strategy that is shown to you should be applicable on a 1 minute chart down, or up to a 1 month chart. All right. So the first indicator, the relative strength index. The relative strength index, and it will most of the time be referred to as RSI, or if you see RSI, then you know that it's the relative strength index. Well, the relative strength index is a very simple tool. It is found in the oscillator indicator section in MetaTrader 4 platform and serves a very basic but useful function. Right. Classified as a momentum oscillator, the RSI measures the speed and magnitude of directional price movement. So I'm guessing you're asking yourself, what does that mean? Well, it tells us whether the market is overbought or oversold. So you'll know that, okay, when a market is overbought, stop buying, or when it's oversold, start selling. Or when it's oversold, stop selling rather. It is scaled from 0 to 100, but then if a market goes below 30, the market is identifiable as oversold, and if a market goes above 70, it can be identified as overbought. Although many people like to trade a bullish or bearish divergence of the indicator, generally at OpenEye Forex, we will like to know if a currency pair is overbought or oversold before there is a divergence. From there, after finding out the status of the pair, we will look for reversal patterns or other indicator entries in line with what the RSI says. All right. We don't always use the RSI. But when we do, we make it a 21 period RSI. The default is a 14 period, but 21 is suitable for a more steady stretched out period, like finding the overbought or oversold point in a week. All right. So the idea after is to use our next two indicators, which we'll still cover, to see if or when we should enter the trade. Example, if GBP USD, the Great British Pound, and the United States dollar is overbought, we would expect to start selling. So we will wait for either a reversal pattern, the Ichimoku, and a Heikenhachi to show a sell signal. So over here you see this is what it looks like. So over here is the 70 mark, above here is the 30 mark, and down here is the 0 mark, and above here is the 100 mark. So 0, 30, 70, and 100. So it's pretty much basic. When it comes down here, that means it's oversold, or when it goes up here, it's overbought. So these indicators will just work themselves. They're already programmed to do their own work. So you don't have to think for this indicator. The indicator will just do its work on its own, and all you'll have to do is look at the indicator to know whether it's overbought or oversold. All right. The next indicator is the Heikenhachi candlesticks. Remember in the Japanese candlestick section of the course, we highlighted that we use new candlesticks? Well, those candlesticks are the Heikinachi candlesticks. We prefer these because they take the average movement of the candle and smooth out the movement of the market. Whilst Japanese candlesticks will show bull and bear candles in a bull market, a buy market, Heikinachi candlesticks will show you smoothed out candlesticks, meaning they remain the same color throughout the trend and not showing multiple colors in that trend. All right. Another thing to take note of is that bullish Heikinachis are white while bearish Heikinachis are red, meaning that when you see white Heikinachis, it means we're buying, and when you see red Heikinachis, it means we're selling. So I'd just like to zoom in here a bit to look at the example of the Heikinachi candlesticks, right? So above here is the normal candlesticks that we always see, and they just bull, bear. But zooming out just a bit, we can see different candlesticks here at the bottom. So what information that gives us now is a more smoothed out move of the market. As you can see here on top, for looking at this first example, there's green, red, green. There's a lot of color. There's a lot of colors. But then the Heikinachi candlesticks like to stay in one color throughout the trend. So they won't change color so often. Even in a bull trend, they won't change color so often. So that helps us see the trend much easier than just here where bulls are always coming in, bears are always coming in, bulls are always coming in. It's always better. This is on a 30-minute time chart. The higher the time frame, the more smooth that these Heikinachis will be. But generally, they're there to help us to not get scared out of a position when we quickly see the market quickly move against us. For example, over here, where there was a different type of sort of candle, versus over here, the same place, but then the market still showed you that no, this is a bearish market, this is a sell market. Or even when we're buying, for example, over here, there was a red candle, but then here it stayed white and helped us to stay in the trade up until the very end. We use Heikinachi candlesticks when executing trades as they show us the price action trend a little bit easier than what Japanese candlesticks do. And the most powerful Heikinachis have flat tops during a bull trend. The most powerful Heikinachis have flat bottoms during a bull trend. So when we go up and you see a flat bottom, you know that it's a very strong buy. Or flat tops during a bear trend. So when you see a flat top like this, then you know that, okay, when there's a flat top on the Heikinachi, you know that it's a very strong indication that this market will continue selling. All right. This helps us by showing that price didn't go beyond the average. So, although candles will stay the same color, it is better when they have flat tops or flat bottoms. And another thing to note, which isn't written down, but then another thing to note, that Heikinachi candlesticks don't open like other candlesticks where price closed here, price opens here, price closed here, price opens here, price closed here, price opens here. What Heikinachi candlesticks do is they open at the middle of the previous candle. So you see, this is the previous candle, then they open in the middle. This is the previous candle, they open at the middle. This is the previous candle, open at the middle, so on and so forth. So that's how you know that, okay, if we pass the flat top or the flat bottom, we sort of broke the midpoint of the line, so that means we might be looking at a trend reversal. But we'll still stay in that trend just as long as the Komachi stay the same. All right. And the Ichimoku can go higher. If ever there's a powerful indicator, it is this one. This is our trend indicator. It is like 5 indicators in one, although we use 4 of the elements at OpenEye Forex. Right? It is made up of the following components: the Chicos Sin, the Cajon Sin, the Chicos Band, the Chicos Band A, and the Chicos Band B. All right, so the Chicos Sin is the one that we don't use at OpenEye Forex, but it is very useful if you want to understand the whole indicator. And within the USB sticks, there will be a PDF of the Ichimoku and explaining it even more or in even better detail. But here is the know-how, and you really don't have to learn anything else if you learn the way we use it here at OpenEye Forex and in our lessons. All right, so let's start with the first one, the Cajon Sin. This is a very powerful function of the Ichimoku. This is the first indicator that tells us that there's a trend change. At OpenEye Forex, we indicate it using a blue line, which that's normally the color. But you can change it to any color you want. Okay, so what the Cajon Sin does, it takes the average of the highs and lows for the past 26 candles and indicates itself with that. It stays in line with the current candlestick, and it may be traded, it may be used for shorter term trading when you use it alone. All right, so the rule with the Cajon Sin, and this is generally the rule with the whole Ichimoku, and it's very straightforward. The rule with the Cajon Sin is that we place buy orders when we're above the Cajon Sin, and we place sell orders when we're below the Cajon Sin. So looking at an example over here, when it's mixed with the Heikanachis, when we're below the blue line, we sell. When we're above the blue line, we buy. So remember how I said that no indicator can guarantee you whatever? In this little section here, we broke above the Cajon Sin. It went up a bit and it went down, continued going down. But finally, when it went above the blue line here, you see how they just bought nicely. And when they went down the blue line here, they sold nicely. So remember that the general rules: buy above the Cajon Sin, sell below the Cajon Sin. The Chicos Band. All right. At first, when one looks at the Chicos Band, they will ask themselves, why would you use an indicator that stays behind the chart by 26 candles? How would that be useful in trading to be lagging? Well, that's a very unique feature. What the Chicos Band works with are closing prices. Therefore, immediately looking at it, we can learn a lot about the current market. If the Chicos Band is above the chart, we can see that we are trading higher than we were 26 periods ago. Thus, we can immediately see that we are in a buy trend. And if it's below the chart, we can see that it is a sell trend, as we would be trading lower than we were 26 periods ago. Generally, people will want the Chicos Band to be above the chart or below the chart in order to make a trading decision. But at OpenEye Forex, we like for the Chicos Band to be above the Cajon Sin or below the Cajon Sin in order to reach a conclusion as to where market trend is going. So this is the Chicos Band right here. As you can see, it is behind the current candle. Unlike the Cajon Sin, it was in line with the candles. This one is behind the candles, over here, behind the current candle. And this is behind by 26 periods. And because it's below the chart, we can see that we're still currently in a sell trend. Chicos Band A and B. The reason the Chicos Band A and the Chicos Band B are mentioned together is because these two combined together gives us the most noticeable part of the Ichimoku indicator. They make up the Kuhmo. And saying it in English, they make up the cloud. The Kuhmo in English means the cloud. This is the most powerful function of them all. And although there is a strategy used at OpenEye Forex that uses just the Cajon Sin, the Kuhmo gives us a strong foundation of many of our trades. Apart from its huge cloud covering, which is hard not to notice, one special thing about the Kuhmo is that it is shifted 26 periods ahead of us, meaning that this cloud stays 26 candles ahead of us. This is a wonderful function because then we can make trading decisions based off what the future Kuhmo tells us. One can set any color they want for the Kuhmo, for a bull Kuhmo and a bear Kuhmo, but using the OpenEye Forex template, pink will show a bullish trend and yellow will show a bearish trend. Okay, so still on the Chicos Band A and B. So now with that in mind, you can expect to sell when you see the future yellow, and you can expect to buy when you see the future pink. But always keep in mind support and resistance. Beware when exiting a Kuhmo at a flat top or a flat bottom. Flat tops and flat bottoms tend to have gravitational pulls to them. So sometimes if we enter a trade on a flat top or a flat bottom, or we see the market break rather on a flat top or a flat bottom, we will look for a market to retrace, and the meaning of retracement is pull back. We will wait for the market to pull back before we enter in again. And the rules of engagement for the Kuhmo are simple and are like the rules for the Cajon Sin. We buy when the chart is above the Kuhmo, and we sell when the chart is below the Kuhmo. All right, so looking at like this, the Chicos Band A and Chicos Band B, or Kuhmo rather, the whole cloud, you see that when it's yellow, it's generally a sell trend, and when it's pink, it's generally a buy trend. And remember what we said, that the Kuhmo, stays 26 candles ahead of us, so we can know maybe if we're on a 1 hour chart, we can sort of predict the next 26 hours, or if we on a daily chart, we can sort of predict the next 26 days. And you see it's ahead of us and it's yellow, so it's showing us that this trend is most likely going to continue to sell. All right, so here are the Ichimoku formulas. You can see how it's all calculated, how the Ichimoku works, and how basically it gets to form itself, what it looks at. I won't go through that, but then you can look at it. But just looking at the whole indicator on its own, here's how it looks with the Kuhmo, the cloud, Chicos Band, which follows which follows the market by 26 candles, and the Cajon Sin, which is the first indication of a reversal. Like I said, it being the first indication, like look, here we broke below the Cajon Sin, then the market went down, finally breaking below the Kuhmo, and the market continued going down. So that's the HMOK indicator. And like I said, that there's many other indicators. All right, so let's just do the conclusion. All right. There is one more indicator which is not mentioned above here, as it is not necessary for trading, but it is very useful and has been introduced to our trading system, recently introduced. It is a support and resistance indicator. Remember, the general rule for trading is that we buy at support and we sell at resistance. So when a market is at support, we would like to buy, and if a market is at a resistance, we would like to sell. Unfortunately, for how it is set up, there is no example for how it can be traded, besides in the live markets. But don't worry, you're still safe with all the other indicators. All right, and another indicator which I haven't added here, but can be very useful to you, is a session indicator. If your trading is broken down to a specific session, like if you trade the London session, the New York session, or the Tokyo session alone, then that would be a very useful indicator to you. All right, so I hope you understand the indicators. If you do not, please don't be shy to contact me. And if you don't know how to add an indicator, just go back to the MT4 navigation video, and you'll know how to load an indicator, where to find the indicators, and how to put them in. And remember, always do your homework. Always go check it out. Always go play with it. And even if you have to go do it on a demo account, go do that. But don't just take information and not go learn more about it. Take all this information that you've been given here and go test it out, go check it out, go see how it works. Like go look at Hikanachi's, go look at the RSI, go there, check it out, and then you can come back next lesson and we'll take it from there. So the next lesson from here is the strategies lesson, and from there we'll cover a few some trading concepts and what you need to do in order to be a successful trader. All right, I hope that you enjoyed the lesson, and if you are lost, please do not be afraid to contact me or anyone of the team. We are here for you. We will always help you. Thank you.